Hi, my name is Neil Saunders and welcome to this week's edition of Retail Perspectives. The sector I'd like to talk about this week is one that's actually done quite well during the downturn, and that's food and grocery. Now the thing is about food and grocery is it is quite difficult for consumers to cut what they buy because we all need to eat to live. So it's one of those sectors that tends to do reasonably well in growth terms even during difficult times. But actually there are some interesting dynamics in the grocery market, and not all is as rosy as it might first seem. So if you look at the growth rate for this year, for example, we're predicting the market in terms of retail consumer expenditure for food and grocery will grow by about 4%. So that sounds quite robust, but actually most of that is price inflation. And if you look at the volume element, volumes are slightly negative, down by about 0.2 of a percentage point. So it's a very flat to negative volume growth environment for grocery. Now, one of the issues with that is that grocers throughout the downturn and still now are adding more and more space. They're opening more stores, they're extending existing stores. Now, before the recession, when things were robust and there was strong volume growth, that model worked because you added more stores, you naturally got that uplift that was coming through in volume growth. In the present environment, it doesn't work. And what we're starting to see in the sector as a whole are falling like-for-likes, falling levels of return on capital for new stores, and new stores being a much less attractive part of the growth story going forwards. What that means is that consumers, whilst they have more choice, don't necessarily go to all of the individual grocers that they once did. So in other words, if a new grocer opens in an area, a consumer may well simply defect and go to that grocer over and above the one that they've been to before. So opening more stores doesn't necessarily pay like it once did for grocers. Now the challenge is, how do you come off that cycle? And a lot of grocers have talked about the end of the space race. But the reality is, when you look at the data, there are still a lot of store openings and there is still a lot of new stores coming through. And one of the reasons for that is, whilst it's a very rational argument to suggest that there isn't the growth to support new stores and we have enough space already, that's a kind of economically rational argument that applies to the sector as a whole. But the sector isn't made up as a whole, it's made up of individual actors and individual players. And of course those individual players, like Waitrose or Lidl or Aldi or even Morrisons, some of the slightly smaller scale retailers, will look at the market and say, well, there's scope for us to open a lot more stores. And indeed, by opening more stores, they do get the growth because they're not saturated. The challenge is for bigger retailers like Tesco, because actually with a big store estate, the market is theirs to lose. They don't have much capacity to open newer stores and get the same levels of growth. So the tack that they've taken is to look at existing stores and to improve the environments, to try and retain customers or to try and win customers back. And that means a lot more thinking is going into those store environments. So we've seen, like in the new store at Watford, cafes, restaurants, added value services provided, nail bars in health and beauty, things that just provide that level of differentiation and mean it's interesting for consumers to shop in that environment again. Now the unfortunate thing is, the growth environment going forwards, whilst volumes do bounce back, is still very anemic. We're looking at about volume growth in food and grocery of about 0.1% next year. So it's not much at all. And in that kind of environment, it is inevitable that some retailers are still going to feel performance pressure as we go forward over the next 5 years. That's a difficult thing for the sector, and it's a difficult thing for investors. On the more positive side, it's a great thing for consumers because it means the sector is more competitive and much more dynamic, and that means we'll see a lot more innovation, a lot more customer service, and a lot more things around price and promotion. So actually, it's not that great a time in terms of grocery retailers' growth, but from the consumer perspective, there's a lot more deals and a lot more interest in grocery going forwards.